with the precious metals temporarily breaking above the $2,000 key psychological level. We note the high volatility in the gold market as tensions in the Middle East appear to persist and the Fed's interest rate decision is due out this Wednesday. In this report, we aim to shed light on the catalysts driving gold's price and asset future outlook. Over the weekend, regional tensions in the Middle East appear to have eased slightly, as the potential risk of a wider regional conflict appears to have decreased. This appears to have been slightly reflected in the precious metals market once trading commenced for the week, with the prices moving slightly lower. However, the potential risk of a wider escalation of hostilities in the region still remain high, and as such, despite the apparent easing of pressures on the precious metal, it could change at any moment. The elevated volatility levels could maintain the precious metals ascent or may mitigate potential bearish tendencies in the market, and considering the delicate nature of the conflict in Israel. We may see the precious maintain some support until the conflict ends. Furthermore, given the precious metal's safe haven status, it may receive safe haven inflows in the event that the situation escalates and spreads into the region, with multiple actors getting involved in the conflict. Lastly, we would like to highlight that should the conflict be resolved, we may see the precious metal weakening as the market volatility returns to normal. Yet, we maintain our view that the aforementioned scenario does not appear to be the case for now. In conclusion, the elevated risks of a regional conflict may provide support to the precious metal, but for now it appears that the lack of a wider escalation seems to be the predominant scenario. In our opinion, the apparent easing of regional tensions may lead to the precious metal weakening. However, in the event of an escalation in hostilities in the region, we may see a higher degree of market volatility for this week, which may provide support for the precious metal, as the situation remains highly volatile. Fed's interest rate decision is due out this Wednesday, with market participants widely anticipating that the bank will remain on hold. In the event that the Fed remains on hold, as is widely expected, we may see the greenback weakening, as it may imply that the Fed is done with raising interest rates for now. In such a scenario, we may see the precious capitalizing on a weaker dollar, given the inverse relationship. On the other hand, should the Fed take the markets by surprise and decide to hike in their next meeting, we may see the greenback strengthening against its counterparts, and as such, we may see the precious metal setting back some control to the greenback, therefore potentially moving in a downwards trajectory. Furthermore, the inflationary pressures on the US economy appear to have eased on a year-on-year level, with the core PCE rates coming in at 3.7% compared to 3.8%, yet the month-on-month core PCE rates point at a different picture. The increase from 0.1% to 0.3% could potentially justify a potential hike by the Fed, as inflationary pressures appear to have not entirely subsided. As such, in our opinion, we maintain the belief that they may hike in its next meeting, which in turn could strengthen the greenback and potentially weaken the precious metal. Thank you for watching.